So Clorox just dropped its latest quarterly earnings, and the results, well, they were a little confusing. Was it a good quarter? A bad one? The headlines couldn't seem to make up their minds, and you can kind of see why. So today, we're going to cut through all that noise, figure out what really happens, and what it all means for where the company is headed.
Okay, so this is really the heart of the whole puzzle. On one hand, you've got their earnings per share, their profit, which came in just a little short of what Wall Street was hoping for. But then, on the other hand, the company's total sales, their revenue, actually beat expectations. So they missed on profit, but beat on the sales? How does that even happen, right?
And that, of course, brings us to the big question. Is this good news or is this bad news? The answer is, it's complicated. It's really a story of some short-term pain that might be hiding some pretty big long-term gains. Let's dig in and unpack this thing.
All right, to get why they missed on profits, you've got to start with the pain points. And the biggest weak spot came from a category of products that is just absolutely core to what Clorox is.
-6%. That's the sales drop year over year in Clorox's super important household segment. We're not talking about some small part of the business here. This is home to huge brands like Glad trash bags and Fresh Step cat litter. So what on earth caused to drop that big?
And, when you actually break down that 6% number, the story becomes crystal clear. It was split perfectly down the middle. Half of that drop, 3%, was just from lower volume. People literally bought fewer Clorox products. The other half came from what the company calls an unfavorable price mix. And this is important. It basically means shoppers were buying the bigger, value-sized packs, which of course have a smaller profit margin for Clorox. Bottom line, people are out there looking for deals.
And look, the company isn't hiding from this. The CEO, Linda Rendell, pointed straight at the intense competition, especially for things like trash bags and cat litter. Those are tough, crowded spaces. And right now, it's an all-out brawl for every customer. But that intense competition doesn't quite explain everything that was going on.
Because behind all these tough numbers, there was this massive internal disruption happening, one that was definitely painful in the short term, but was also absolutely critical for the company's future.
It all boils down to these three letters, ERP. It stands for Enterprise Resource Planning. Now, that sounds super technical, I know, but you can just think of it as the company's digital brain. It's the central nervous system that runs absolutely everything, from making the product to tracking inventory, all the way to shipping it out and billing for it. And Clorox just finished a huge multi-year project to replace their entire system.
Yes, so as you can tell, this was no overnight project. It was a long, staged rollout that just finally finished up in January. The key thing to remember here is that while this massive upgrade was causing a lot of the recent chaos, that disruption is now over. It's in the rearview mirror. The new system is up and running.
So, with that huge project finally done, the company is now able to shift its focus entirely to what's next. They've laid out a really clear plan to kickstart growth, and it's basically built on three main pillars.
First things first, they are unleashing a ton of new products. We're talking about a new cleaning platform they developed called Pure Allergen, new and improved Glad trash bags with leak guard, a whole multi-year relaunch of their cat litter business to try and win people back, and even some new stuff for Hidden Valley Ranch. They are betting big that all this innovation is going to drive sales for the rest of the year.
Pillar number 2 is a really big deal. They're planning to buy GOJO Industries. If you don't know the name GOJO, you definitely know their main product, Purell. This is a massive acquisition that would immediately make Clorox an even bigger player in the health and hygiene world, adding another iconic brand to their lineup.
And the third pillar? It's all about leaning into what's already working. Because while they were struggling in the U.S. household division, Clorox's international business was a huge bright spot. It grew by a very strong 7%. This really shows that there's some real underlying strength for their brands. You just have to look outside the U.S. market to see it.
So, when you put all these pieces together, what you're really looking at is a company right in the middle of a major transition. It's shifting away from a period of that intense internal work and disruption to one that's all about external growth.
Okay, so let's boil it all down. This is the whole story in one slide. The headwinds, the challenges, they're real. You've got pressure in those key household categories, you've got that fierce competition, and you've got a shopper who is laser-focused on finding value. But the tailwinds, the things pushing them forward, are just as powerful. You've got a pipeline stuffed with new products, that huge potential acquisition of Purell, and maybe, most importantly, that painful ERP upgrade is finally done, turning a past headache into a future strength.
So it really all comes down to this one question. Clorox made it through its internal storm, and now it's betting its future on brand new innovative products and a huge acquisition. But in this economy where so many people are trying to save a buck, will customers actually open their wallets for it? That's the billion-dollar question we'll all be watching.